So we have multiple choice for chapter 31, right?
Sure.
All right.
Mm. Sure.
Start, please.
No, I didn't. I didn't do any noise. I didn't do any noise.
Start, please.
Oh yeah, start.
Yeah.
Oh, I thought you said stop or something.
I said start, please.
Yeah, I'll start. Uh,
So we have multiple choice.
number one.
Multiple choice for chapter 32 or 31. Chapter 31.
31.
Okay. Ratio
Uh,
analysis. Question 1.
Number one. Gross profit is equal.
Gross profit.
Is equal to which of the following? Interesting. Okay, we have A, operating profit plus revenue. B, revenue minus cost of sales. C, revenue minus operating profit. And lastly, we have D, revenue plus cost of sales. So,
Gross profit is equal to
B.
which of the following?
B.
Gross profit is revenue minus cost of sales. Great. B. Question 1. B.
B.
Question 2.
It's from the other lesson.
Yeah. Question 2.
Okay, number 2. A business is likely to have a sufficient working capital if the current ratio lies between of which of the following.
Well, let me just explain that to you. For the current ratio, sufficient working capital would be from 1.5 to 2.
Sure.
Do you get it? It's from 1.5 to 2. Clear?
1.5 to 2.
Yeah. So when you calculate your current assets, that's current asset divided by current liability. So the ratio should be 1.5 ratio 2.
1.5 ratio to 2.
Yeah. Question 3.
Oh.
Question 3.
It's really, it doesn't mention, right? Didn't mention.
Yeah, but yeah, you just have to know that, please.
Okay, sure.
Question 3.
3. So you use it if in a formula or something.
Yeah, current assets divided by current liabilities.
Current assets divided by current
asset liabilities, yes.
That's where I
That's
use
your current ratio.
current ratio. And I use 1.52 over 2.
It should, if you have 1.5 to 2, then you have enough working capital.
Let's say it again.
If you have 1.5 ratio 2, you have enough or sufficient working capital.
That means it's good.
Yes. There's no liquidity problem.
That's the normal one.
Yeah,
1.5
question
to 2.
3. Yeah.
Okay. Number 3, if revenue equals to US divided by 500,000 and the operating profit equals to
100,000.
dollars.
What is the operating profit margin?
Will be, we know that operating profit margin is operating profit divided by revenue
Multiplied by 100.
Yeah, multiplied by 100.
So we have operating 100,000 divided by 500,000 multiplied by 100,000. 100,000, 100,000.
So calculate it. It's 5. Okay. It's 100,000 divided by 500,000, right?
Multiplied by 100.
1,000.
500,000, 100,000 divided by 500,000 multiplied by 100.
Yeah.
So that's what? 0, 0. Then we have 1,000 divided by
20%, which is A.
How did you do it? Tell me, please. 500,000 multiplied by what?
100,000 divided by 500,000. You give us 0.2.
Okay, multiplied by 100.
Yeah, it gives us 20%.
A, good. Question 4.
Okay, this is easy. Number 4, the return
on capital employed.
Capital employed. Right, I said it right?
Yes.
The return of capital.
Return on
capital employed is given by which formula?
Formula, yeah.
Which is the gross profit divided by revenue times 100. The operating
that is profit margin.
Capital, yeah, obviously. Operating profit divided by capital employed times 100. You have operating profit divided by revenue times 100. Current assets divided by current liabilities. It's B.
operating profit divided by capital employed multiplied by 100. Good.
Obviously, because capital employed, it's already
It's
said
there.
it.
So it is always operating profit divided by operating profit over capital
It-
employed multiplied by
The formula
100.
said it's capital employed, it's already
Yeah.
mentioned.
So that's question 4, which is what?
It's very easy.
Question 4 is what? C. No,
B.
B. Great. So that ends
C is
chapter
for
31.
other formula.
Yeah, that ends chapter 31.